Hello again, everyone. This is Joe with Beyond the Chart, and this is a weekend market wrap. Today is Saturday, March 12th. We're going to check in on the market here, and this is an abbreviated version of what I give my insider members, but let's dive right in. S&P 500 on a weekly basis, you can see we've been up for 4 weeks in a row, and it's a pretty good bounce. And back in October into early November, we were up 6 weeks in a row. This has been 20 trading days. This is 25 trading days. I do think we're getting towards the end of this. And right now, the wave count I've got on an Elliott wave basis is that we're working a 1, 2, we're working 3, and that this is the minute wave 1 of 3, and we're doing 2. We're going to get a 3, and then 4. This may go a lot lower than where it is right now. That's just my initial scenario that I've got patterned out, okay? So that's the scenario we continue to see play out. The Russell 2000, the same thing, although the Russell 2000 looks weaker than the S&P 500. And you can see we didn't get much of a bounce back here. You know, it's a decent range here on the Russell this week, but it was only up 5.6 points. And so this is the 4th week pulling back also. But it is also a lot weaker than what we saw on the S&P 500. You can see, I mean, the Russell 2000 comparably is all the way down here in terms of the move that it made. So we're watching for this move to peter out. There's some gaps on some of these indices to close. Let's take a look at the indicator. A high-low indicator is one of the indicators. There's several indicators that I keep and share on a daily basis. This one here is one that just shows that the market, no matter how strong it rallies, since the market high back here in May 2015, when the S&P 500 and the Dow peaked out in May 2015, it has not, except for one day, has not had a reading higher than 88 in terms of the net of 52-week highs minus new lows. And it'll get extreme sell-offs, and then it'll bounce back. And right now, this is just like in a little neutral zone. It gets right back up to it, and then it rolls over. We'll see whether the pattern continues to hold. And the other one we'll take a look at today is the VIX. The VIX collapsed back down the last 2 days, especially with the move up in the market the way it did. Now, the close here, for the market being up so strong, the close was only marginally to a new lower close below this reading on March 3rd. So it's and it didn't take out the low on March 4th. So it's going to be interesting to see whether this starts to turn. It looked like it was going to do it here then, and then it collapsed back down. So now, after staying above 20 for quite a while, it's pulled back down, and the last few weeks have been below 20. All right, let's take a look at some of the key market of the ETFs that kind of a reading on the economy, the semiconductors, the home builders, and the financials. So the semiconductors had a pretty big swing down here with this August move. There was a lot of damage done with this move. We got the bounce back just like in the market. Now, we haven't gone to a lower low like the Russell 2000 or et cetera, but I do think that this is the same market, what I'm seeing in terms of like on the S&P 500 in terms of the bounce back. And, I'm looking for this move to peter out fairly soon. Could be as early as Monday. The home builders, even more damage. You look at the home builders. So this is really interesting that we really dropped off here in the cliff into the December into January into early February move here. And now we've gotten a bounce back. And let's take a look at, I'm just curious about the retracement on this move. Well, we're right at about 50%. We're just edging a little bit higher than that right now. A lot of the indices have bounced back actually above 61.8%. So it's putting in a deep retracement, although the October move was a fairly deep retracement also of the August sell-off. And the last one today is the financials. And you can see when you look at, let me zoom out of this just a little bit. When you look at the body of the trading in here, this really was kind of a freak day. I mean, it just, and what you really don't know is, yeah, we got a low way down here. You don't know, was that 1 or 2 sales or what was that? Because that liquidity was terrible in the first few minutes of the market on that day. And so you almost look at this and say, well, here's the body of the trading in here. We have punched to a lower low down here, especially on closing basis. We're kind of like stair stepping down, and now we're getting this little bounce back. And when you look at it, you can say, well, where is it bouncing to? It's bouncing right to this, this lower level. So it's going to be seen whether or not it continue to push or not. So the financials are stair step down. The home builders look the weakest. Semiconductors took an initial first step down that was pretty bad in August. All right, let's take a look at two stocks that my insider members are in on Trade Ideas. We've got a reversal play on that we got into earlier in the week, and we got a little bit pushed against us here, but I'm still watching for this to reverse down. The Newmont has come a long way. Not saying that it isn't going to continue to go. I just think that it looks like it's ripe for a pullback. But the main reason is I got a reversal setup that came into play. And, I don't just kind of jump at something and say, oh, I think it's ready to go down, or, oh, it's gone too far. I have specific setups that tell me here's how to execute. And the other one is on the bonds, TLT. This is another one that we got into in terms of Trade Idea with puts to move down. And right now it's going our way very nicely. I'm expecting it to continue, and we'll see what kind of trade we can get on this one. So right now the bonds continue to pull back, at least the long-term bonds do. All right, that's the picture for this weekend. Just a quick snapshot. I hope everybody has a great weekend, and we'll see you on the next video next week.